Today I will be presenting on the topic, the Great Wealth Transfer, Inheriting New Preferences. Over the next few decades, the world is expected to witness one of the largest transfers of wealth in history. This transfer will occur when older generations pass their wealth to younger generations, such as Millennials and Generation Z. This process is called the Great Wealth Transfer. As wealth moves from one generation to another, we are also seeing changes in investment preferences, financial priorities, and spending habits. Younger generations tend to invest differently, think differently about risk, and place more importance on sustainability, technology, and social responsibility. In this presentation, I will explain what the Great Wealth Transfer is, why it is happening, how it is changing investment preferences, its impact on financial markets and society. 2. What is the Great Wealth Transfer? The Great Wealth Transfer refers to the large amount of wealth that will pass from older generations to younger generations over the coming decades. Many individuals from the baby boomer generation accumulated significant wealth through property ownership, stock market investments, business ownership, retirement savings. As this generation ages, their assets will gradually be inherited by younger generations like the Millennials and Generation Z. This transfer includes wealth in the form of cash and savings, real estate, investment portfolios, family businesses. Financial experts estimate that trillions of dollars will change hands globally during this period. 3. Why is this wealth transfer happening? There are several reasons behind this large-scale transfer of wealth. 1. Aging population. The baby boomer generation is reaching retirement age. As people age, their wealth is naturally transferred to their children or family members through inheritance. 2. Long-term wealth accumulation. Over the past few decades, economic growth, stock markets, and real estate values have increased significantly. This allowed older generations to accumulate substantial wealth. For example, stock market growth represented by indexes like the S&P 500 has increased the value of many investment portfolios. 3. Inheritance and estate planning. Many families plan their finances so that wealth can be smoothly transferred to the next generation through wills, trusts, and inheritance planning. This process ensures that assets remain within families. 4. Changing financial preferences of younger generations. One of the most interesting aspects of the Great Wealth Transfer is that younger generations have different financial preferences compared to older investors. Let's look at some key differences. 1. Focus on sustainable investing. Younger investors care more about environmental and social issues. They often invest in companies that follow ESG investing, which stands for environmental, social, and governance investing. This means they prefer companies that protect the environment, promote social responsibility, follow ethical business practices. 2. Interest in technology-based investments. Millennials and Gen Z are more comfortable with digital technologies. Many young investors are interested in innovative sectors such as artificial intelligence, fintech, clean energy. They also invest through digital platforms like Robinhood or Zerodha. These platforms make investing easier and more accessible. 3. Rise of cryptocurrency investments. Younger generations are also more open to new types of investments, such as cryptocurrencies. For example, digital assets like Bitcoin and Ethereum have become popular among young investors. Although these investments can be risky, they attract people looking for higher growth potential. 4. Preference for social impact. Young investors are not only interested in profits, but also in creating positive social impact. They often support companies that promote diversity and equality, reduce carbon emissions, support community development. This shift is influencing how businesses operate and how financial markets evolve. 5. Impact on financial markets. The Great Wealth Transfer will have major effects on global financial markets. 1. Changing investment trends. As younger investors gain control over wealth, they will likely invest more in technology companies, sustainable energy, innovative startups. This may reduce investments in traditional industries like coal or heavy manufacturing. 2. Growth of digital finance. Digital platforms and online investing tools will continue to grow. Younger generations prefer fast, mobile-based, and technology-driven financial services. This will encourage financial institutions to innovate and adapt. 3. Increase demand for responsible companies. Companies that focus on sustainability and ethical business practices will attract more investors. As a result, businesses may improve their policies to meet the expectations of new investors. 6. Challenges in the wealth transfer. Although the great wealth transfer offers many opportunities, it also presents some challenges. 1. Financial literacy. Some younger investors may lack experience in managing large amounts of wealth. Without proper financial knowledge, there is a risk of poor investment decisions. 2. Family conflicts. Inheritance can sometimes lead to disagreements among family members regarding the division of assets. Proper planning and communication are necessary to avoid conflicts. 3. Economic uncertainty. Global economic challenges, such as inflation, market volatility, and geopolitical tensions, may affect the value of inherited wealth. Therefore, careful financial planning is important. 7. Role of financial advisors. Financial advisors play an important role in helping families manage the wealth transfer. They assist in estate planning, investment management, tax planning, financial education. By guiding younger investors, advisors help ensure that inherited wealth is preserved and grown responsibly. 8. Future outlook. The great wealth transfer is expected to reshape the global economy in the coming decades. As younger generations gain financial control, we may see more sustainable investments, greater use of technology in finance, increased support for socially responsible businesses. This transformation will influence both financial markets and corporate behavior. 9. Conclusion. To conclude, the great wealth transfer represents a major shift in global wealth distribution from older generations to younger ones. This transfer is not only about money, but also about changing values, priorities, and investment preferences. Younger generations are more focused on sustainability, technology, social responsibility. As they inherit wealth, their financial decisions will shape the future of businesses, markets, and the global economy. Therefore, understanding the great wealth transfer is essential for investors, financial institutions, and policymakers. Thank you